All right, David Prince, welcome back to Benzinga's pre-market prep. How are you doing this morning?
I'm good. I just found out we don't have real jobs, so I'm kind of feeling very chill. I'm like, I don't have a job, I'm just chilling.
I was at Bright Trading for a long time, and Don Bright used to always say, like, people would come up to me, he's like, well, what do you do? How do you help the world? How do you help the economy? And Don Bright would say, we are liquidity providers. Without us, people wouldn't be able to get in and out of their positions easily. And I'm like, you know what? That's true.
Very important.
Yeah, so he's like, you have a very important role. So don't let anybody tell you don't have an important role. Without traders, investors couldn't get out of their positions. And I'm like, you know what? That is the truth there. So that's what we tell them, David. We are definitely liquidity providers.
All right, well, David, we're gearing up for this federal or the Fed's decision tomorrow, interest rate cuts. That's the expectation. Before we get into, what you think the fallout from that will be, give me your prediction, 25 or 50. What's it going to be?
I have to say, I think like most people, I've been like every single meeting, it's so clear, right? It's most like transparent Fed we've ever had. I mean, If you're old like me, you remember the briefcase and us guessing. Now it's like, you know what he ate for breakfast. I don't know. I have zero
all that to say, we don't know.
It's very easy to say, well, 50 basis points isn't a reality. It's actually very much a reality for the first time, in my opinion, that I can remember with him. And up till this week, I started to say, nah, it's still a quarter point. So here's what I'm going to tell you. My playbook is that the dot plot, which we only get a few times a year, and how he conveys this cut is everything, and 25 or 50 is maybe only 30% of what's important. That we have a lot built into 24, and by the way, we have a lot built in terms of cuts in 25. So I'm going with dot plot and how he conveys things being 70% of how the market reacts.
So this could be on the presser, what I was saying earlier too. The presser may actually be more important than the initial headline.
Oh, no. It's. I mean, I don't mean to be cocky here. I'm sure it is, in my opinion. I really am. Because he can do 25 and be so dovish and give you almost, there are no guarantees, but he can give you a very strong indication there's 75 basis points this year and another 100 next year. And at the same time tell you that it's normalization and it's not to save the economy. And the markets can get pretty excited off that, right? Where they may trade down for a quick minute. So what I'm doing is basically planning how might the market respond on 25 basis points is probably a buyable dip if it's aggressive, especially if we have a dovish forward guide. So
these overshoots on the initial headlines, do you trade those too sometimes, David, where sometimes you'll see the algos like buy relentlessly on the headline or sell relentlessly on the headline, and then we get the snapbacks? What's that?
I'm good with planning. Headlines, I'm not so good. I have like lost more money trading headlines in my youth than I care to admit. So I don't trade headlines much. But on this, the difference is I'm preparing for the headline, so I will trade it. And I have, people in Inner Circle know Fed days are actually some of my best days. Maybe I'm just weird, but because I always tell people don't trade Fed days. Like most people, I really think should not, or at least wait, like absorb the news. I'm not a good reactionary trader, like most of us are taught. Don't guess, react. I'm kind of the opposite. I plan. If X happens, then I'm pretty darn sure Y is going to work. So if I hear X, I'm doing Y. So, I'm prepared for the headlines. But typical headlines, whatever raises guidance, blah, blah, blah. I don't really chase candles too much.
David, before we
go ahead.
I was just going to say, before we continue, I don't know if you're using like a different mic setting today.
I am. Does it suck?
It doesn't suck. It's just not as good as we're used to hearing.
I'm going to make sure it's fixed for the next time. If I move this up, is it any better? If it's
a little bit.
Okay, I'm sorry.
A little bit. No, it's just not as crisp as what we're used to hearing from you. I know you.
My apologies.
It's all good. All good, brother. All right, so let's move to some individual names right now. We've got some tech headlines. You had Apple trading down yesterday on some weaker than expected iPhone sales. I know you're not really trading the headlines, but like, what's catching your eye right now in terms of individual names?
Sure. Well, about 2 weeks ago, I went, and this is less a name, but more a sector, but I still should say, at about 95, I looked at XBI based upon the time of the year and that we know we're getting a rate cut. And I really thought it's time to get aggressive again. And it's something I'm very familiar with and had a huge trade in at the end of 23 into the beginning of 24. And I said, God, this is so similar, except the difference is we're going to get a cut this time. And a lot of smaller stocks, oddly enough, don't like to front run too much. You know, the rest of the market is thinking 6 months in advance. Small caps sometimes need to actually have something come to fruition. So I thought it's biotech. So my points here is I've been pretty aggressive with XBI since 95. I really think we're going to get over that 103 and have a breakout that looks a lot like IWM through 210 to 228. I think is similar to what we'll see with XBI above 103 at some point by the end of this year to a 110, 120.
I mean, what suffered more than small biotech from the interest rate hikes that we have?
You cannot find a sector. And if you look at the charts, VKTX, a big holding of mine, Immunome, a big holding of mine, all the charts look beautiful. VKTX, Immunome, TGTX. So a lot of its components are very powerful. And then it's weird. I've been pretty focused on small and mid cap. That pullback we had 2 weeks ago, not the major drawdown. I mean that Friday about 2 weeks ago, not August 6th or 5th. One of my biggest buys was a firm, which is not typically what I do, right? I'm going after Meta or Nvidia. I did buy Nvidia that day, but the point at 101s, but the real buy for me was a firm right in front of the 200-day at 36, which is getting ready to pop over 45 and break out to 50. So a firm, big name for me. VKTX, big name for me. Immunome, big name for me. So definitely more mid and small cap than I've been in a really long time.
I got a question for you, David, and I saw you tweet this yesterday. A firm is presenting today at the JP Morgan conference in London. It's hard to find a master list of where all these companies are presenting. Do you have a go-to spot? We try to put it together at Benzinga. I know Briefing tries to put it together. There's a lot of different companies that try to put it together, but it's hard to get that master list. Do you have a spot, a go-to spot where you get
no BS?
List?
I have a buddy who's one of the bigger news guys on the street. You guys probably know. What does he go by on Twitter? Flow Rider. Florida Trader. Okay. Anyway, it's my buddy that I'm sure you probably know.
Beach Trades?
What'd you say?
Is it Beach Trades?
No, here, let me tell you. But the bottom line is he's always there in front of everyone. So when he tells me, I know, because you're right. It is so hard to figure out what the master elite. He goes by Mark Flow Chatter.
Yeah, I follow Mark.
Anyway, so he has a great he has a great news let's just say setup, and he's there before everyone else. I go through Trade the News and Briefing, but there's nothing like you said that really gives you no, I really do go through Benzinga. Actually, I never used to. You guys are an easier use. I find Benzinga easier to use than a lot of the old school ones like the Trade the News and Briefing and all those others. So when I go, because I'm a tech idiot, so Benzinga works for me. Anyway, no, I don't have a one size fits all for news items.
Okay, we were hoping you had the master list because we've been trying to find who actually puts together the master list here.
Well, Dennis, you just identified a hole in the financial, data and news market. You fill it.
Benzinga's going to start doing it.
That's your real job right there, Dennis. That's
I don't even know what time they report today. It should be so simple. I look. London, everyone's like, what time? I still don't have a confirmed time.
Wait, is the JP Morgan health, or no, it's not the healthcare conference, obviously.
It's like consumer conference, JPM.
Okay. Well, let's start there, just knowing which conferences are going on, let alone what companies are speaking.
Right. Listen, they matter. NVIDIA conference, granted, it's NVIDIA, but it totally turned the market a week ago, right? So you do have to pay attention. I remember talking on Twitter saying, listen, this Goldman Sachs conference could be the biggest moment of the week. And I had a guy say, well, why would this conference be anything, blah, blah, blah. It turned the entire market.
Yeah, they're big. They're like events. When you get a big company, you get a big CEO presenting there, it can turn the entire, and sometimes they drop a bomb. They just raise guidance like Oracle did last week. And I'm and that's why I was I was caught. I was actually short on that. I'm oh my God.
Where are you? I'm sorry, brother.
I got hammered. That's, you know what?
Let me make you
It
feel
happens.
better. It got to 84 relative strength. That extension was so insane. I actually did a really decent sized short pre-market above 170. I covered for 2.5 points and missed 10.
Yeah. Well,
No, maybe 11. Maybe 11. It felt like I lost money. It was maybe the worst short of my life. I made 2.5 points and missed 11.
I wish my
that
worst
was
shorts had made
insane.
2.5 points.
David, so when we're talking about the overall market, I mean, trading is never really easy necessarily. I mean, I know it felt easy at certain points of 2020 and 2021 when everything was just going up, but especially when there's no like clear defined trend of either like a strong bull market or a strong bear market. And it kind of seems like we're in that just choppy zone right here. I mean, you can see just this is on the S&P 500 daily chart. Like, what is your strategy like when it is like this and we're up one day, down one day, down? You know, we had that August 5th Monday with a yen carry trade, the whole market, you know, worst market day, and then the rest of the week we're all green. Like, what do you do when you don't know what's going to happen every morning when you wake up?
I so believe in this, and I write about it on Twitter. I really mean this. So, like anyone who's like more new to the game, I don't care if it's 3 years, smaller money. To me, this is everything. This is like one of the most important things I give people, and I don't fancy myself the smartest guy in the room. I do not care about making money every day. I used to, like 20 years ago. I care about when opportunity comes, making use of it. And I really have learned, and it's bona fide works for me and hundreds of people that have learned from me, which is literally 1 day can make your week, 2 days can make your month. And it's not because you're some big shot or you pick the best stocks, it's because you do less in between. So like it's out there, the trades are documented. When that August moment happened, right? I didn't buy everything. I wasn't not scared, but I really looked at the risk reward and I went hog wild on NVIDIA at 97 to 91. And I really did hold a lot of it to 120 and some of it to 130. I did buy a lot of Soxel at 25 and I got out early at 36. But my point is those trades made my month. I didn't need to worry about day to day. So I always say, pick your spots, size right, and do less in between. It wasn't last Friday, the Friday before. I said there is a great level all week. People are like, should we buy the dip in NVIDIA? I said, honestly, I'm not in a rush. We just bought it as low as 90. But 101 is a spot. We know it's a spot because we bought it there and made a lot of money off the Microsoft guide. You guys won't remember, but Microsoft got it for higher CapEx. They took NVIDIA down, which was dumb as hell, and we bought it 101. So I said 101. 101. That's our spot. Anyway, it got there Friday. I bought it. And the next thing we knew, a couple days later, it was 120. Do those trades. You don't have to be a genius stock picker. I bought NVIDIA. Duh. Like, oh, wow. NVIDIA's for.
Yeah, where'd you hear about that one?
I don't know. Did some homework, like, and some really smart guy on Twitter I followed. But that's what we do. And if you compound that over a period of a year, you're doing so much better than the average investor who's figuring out how to make money every single day. So up and down markets, I think that's more important than ever. In trending markets, you don't get that opportunity. You have to hold your winners longer, take your losers faster. But in these choppy markets, that's how to win. I mean, it's just, by the way, I went to Soxel again that Friday. Bought it in the 25s, again, sold it early because I always do, sold it at 30, but it was still 20% in a few days. So that's what we do. I'm not excited about the market here as an investor, right? I'm investing in XBI and a lot of names because I see a catch-up trade, but I don't look at this market with the S&P above 20 times earnings and start to get excited and say, now's the time to invest. If you missed the Qs at 260, please put grandma's money in now. There's probably, if you're looking out 5 years, ignore this. But if you're looking out the next 6 months to a year, I can't make a case as an investor to say there's far more upside than downside. I can't. Maybe you guys can. So I do think it's volatile moments where you make your year.
I mean, maybe we're moving into this type of a market, more algorithmic. Maybe it is the type of market where we do need to be more traders and longer term investors. And I'm not talking to the person of the day job, but if you're looking, maybe just got to lengthen those time horizons.
Yeah. My meat is like 2 weeks to 2 months, right? Certainly not a day trader. And if you ask me where the market is a year, like I'll literally be like, okay, see you guys. I don't pretend to know. So it's
nobody's got a crystal ball.
Right. Well, some guys think they do, but it's like that.
David, we have this, we've got your free book to prepare for the coming uncertainty in the stock market, which is kind of just what we've been talking about. Give us a little tease on that book, what it is, what can people, gather from that? We do have the link in the description of the video. I'll drop it in the chat as well. It's t3live.com/Benzinga. You can also hit that QR code on the screen.
It's really about how to figure out sizing and doing less. So in other words, not having 20 positions, and if you want alpha, to figure out your 4 best ideas, to do maybe nothing on Monday and Tuesday, and on Wednesday when your, say, A idea, right, comes into a great buy level, doing it. And then if you miss your A idea, right, because you were at the dentist, and you miss your B idea and you have the C and, say, the D and E idea, to actually penalize yourself, not in a bad way, but not do that. Because you want to focus on your best ideas. I see it's like my edge is not I'm the greatest chartist. It's just logic. So if you miss your best idea, your first 2 or 3, you know how many guys are pissed off and emotionally gonna, on a cute cash flow idea, try and fix it versus a very average idea? A lot of guys. So it's more about that. That's where my edge is where to focus day to day, week to week, and month to month. And honestly, how to take a loss and hold a winner, like real basic stuff that people seem to still lose track of.
All right, well, we've been on the line with David Prince, of course, coming to us from T3. We love our T3 Tuesdays here at Benzinga's Pre-Market Prep. David, thank you again for hopping on with us. Enjoy the rest of your day. And guys,
good luck tomorrow.
Appreciate it, guys. Go check out that book from David.
Thanks, David.
We'll chat with you soon.